because the volatility has increased in the last several weeks, the neutral boxes are wider. I'm using wider ranges and so forth. So when things start to die down and the ranges get tighter, the neutral boxes will be smaller and therefore the risk is not as much as it was. Okay. Anyways, let's go ahead and get started again. This is not like trading advice telling you to take a trade. I just want to show you how price reacts around these levels and where those levels are coming from. All right. So first things first, I'm going to get this out of the way. I was looking at the SPY charts and so forth, and what we're looking at is a daily. This is last week's levels. When we came into this week, I want to show you how we were going to trade them, and I want to open up the floor to, hey, I get what you're saying, John, but why would we take the trade there? Why wouldn't we take the trade and so forth so that we all kind of are on the same page? Okay. So this is SPY, and these are the day charts. And this is Monday, Tuesday, Wednesday, Thursday, and Friday. Now, if you recall, on Monday, we had the pullback, okay? And price came down close into the YE is what I use for the top neutral. And on a smaller time frame, we would be looking for price to have an inside and up, okay? As price gets closer to the neutral, we're looking to take the trade to the upside. And then once we hit target 261.21, we either close or we add on strength above, okay? Now, like I explained in the broad market analysis, when price moves into here, say we gapped up into this target, we don't take the trade because remember, these targets, they are linked to some sort of supply above. So we expect price to reject here. So it's always nicer to take the trade lower on the curve and then ride it up into target and make money there, okay? So a lot of times what will happen is traders will wait until price gets here, and that's about the time they start getting long, okay? We're all guilty of it. And then price pulls back, okay? So I need you to try and think to buy low and sell high. So using the blueprints, we want to buy lower and sell on the higher targets, okay? Or you can look at it the opposite way. Hey, I think if we start breaking down underneath one of these targets, I want to start getting short into the targets he has below. That would be the top neutral line, the bottom neutral line, and then the targets I have underneath neutral, okay? All right, so if there's any questions about that, please let me know. Now I'm going to go ahead and I'm actually going to erase the stuff that's on here and we're going to develop the blueprint going into this week, okay? So first things I want to do, I'm actually going to, I'm going to take all of this off. Breaks my heart. And for me, it's just easier to work with if I take these off, okay? And usually I'll take these off, but I'll keep the neutral box so that I don't have to recreate it, okay? So a couple things I want you to look at. This is the daily chart. We have two ranges here. I have this range and I have this range. Does everybody see that? And we also have this right here. Do you guys see that? Okay, so very straightforward, right? So I feel like if you can't see this, then please say so and we'll go back into it and kind of describe what I'm looking at. But basically price moves up, it goes sideways and then creates a new pattern. Price goes down, bottoms out, and then creates this nice trend. Price goes sideways and then breaks down again. So I want to take all this into consideration, and this is where we use the training that I give or the education behind the Fibonacci's. All right, and so there's a couple things I want to do. First, I want to take note of any edges that are on my screen. So here we have the YE. We have to take this into consideration. We know how powerful this can be. So I know that's here, and I can see where the monthly edges are. Remember, blue is yearly, pink is monthly. Okay? So I already have identified those. I've identified two different trends, one in this down range and then this pop that we had starting around March the 24th. All right, so we've identified all of that. These weekly edges are from last week. These are not into consideration for this blueprint at all. If you notice, I don't have the edge script that shows me future edges. Okay, so I'm not looking at any of that. So the weekly doesn't matter to me. If you have the future weekly, yes, you could identify that, but I'm going to show you how I do this. All right. So first things first, I'm going to use some fibs here. What I'm thinking when I look at this is if price wants to travel up, then it's going to travel within this range. So my idea here is to at least take into consideration this range to the upside. I'm looking at the ATR, it's $17. Let's look where current price is. It is at 248. When I look at this range and take the monthly edge into consideration, or let's just say you don't have the edges. Let's take the bottom of this candle right here and say 305. Okay, what's 305? So I'm pretty slow at math sometimes.
Nearly 50 from
Huh?
where we're at. Nearly 50 from where we're at.
Okay, 305 minus 248. Yep, it's pretty high. Okay, so
Yep.
we know that that's way outside of the weekly ATR. Okay, so let's go ahead. We're going to find this here from top to bottom. All right. What can you guys tell me about in this downtrend? What can you tell me about these Fibonacci's and where price is right now? So according to the methodology, here's the 38.2, 23.6. Good. All right. So would you agree? Okay, now we're finding these levels. So the
Mm,
38.2 is bearish and we have the YE there. Which one would you pick? We're going to pick one of these for our top neutral line. Do you see where I'm getting at with this?
yeah.
Because price is underneath this, it's going to be resistance until it's not. Okay? Right. So let's use the 38.2 because it's actually above the YE and we want to be safe. Because we know that sometimes price can go over one of the edges and come right back down, right? It happens all the
Yeah.
time.
Yeah.
It happens all the time because we're looking for inside and up. So it comes back down to make that inside. So we're actually going to move this for right now. We're going to move that up to the 38.2. All right. All right. Now, within this, we can go ahead and we're going to look up and to the left. We're going to go to the top of this. All right. And we're going to get us a target that's right into this top. But notice that the top of this candle is also the bottom of this candle. Okay. That's resistance until it's not. So my first target instead of 265 is actually going to be 262. Because let's be real here, folks. If we break out of the 38.2 at 254, I'd rather shoot for 262 than 265. I know it's only about a $3 difference, but the closer, the better for me. Okay? Because here, to me, this is being greedy. But this target here makes sense because it's a double top and it's already served as resistance. Okay? So I'm not using the 50 in this case. Now, if you trade this up to the upside and it breaks out, yes, you can take into consideration that the 50, the 265 level is right above here, so you want to be careful. But also note, using this target is also confluent with the EMA here on the daily. Okay, just a couple things to think about. Now let's figure out, well, where's the bottom? Okay, and I love this, by the way. The accelerator and the 618 are also confluent. So we're going to use a
Hmm.
target up here. And I'm actually going to go underneath this body. Remember, when I'm finding targets using Fibonacci's, I tend to create the target right before the Fibonacci, right? And if I'm entering, I want to get in right before the Fibonacci as well, because
Yeah.
I feel like they like to turn price around very quickly. So we're going to go right underneath the body of that candle and those green arrows there, and right before the 618. So those are targets to the upside. Now, how do we figure out the bottom of the neutral? Let's take into consideration this trend. Okay.
Yeah.
So I'm going to use this. This is an uptrend. Okay. So remember, this is the thing. If you're not in the library, you need to understand where to put your fibs too. So some people might actually draw from the top to the bottom. Because we're moving up, we're using the bottom to the top so that our 23 and 38 are at the top. Because remember, we want to stay in a bullish trend. So opening up the floor again, where do you think I want to put my bottom line in this case? Nice. So the 38.2. All right. You guys seeing some confluence there, right? All
Yeah.
right. So once again, though, I want to be safe. I want to check out the surrounding area before I place this line. And so I notice that the 38.2 is not quite flush with the body of this. And see, this is like, you could look at it as an imbalance or where buyers step in to take price up. So a lot of times when we're looking at demand zones and stuff, price will come back down and we start to look underneath these candles right here, okay, for price to go bid. So, and you can actually see this candle right here actually came right down to the bottom of that candle. So just
Hmm.
because it's so close, I'm actually, instead of the 38.2, I'm going to move it down to just underneath that body, okay? And if price were to break down after it loses the 38.2, I'm going to use the 50, okay? But before I just click on the 50, I need to look over here and make sure there's nothing going on. There's nothing really going on here, okay? So I'm going to come up here and I'm going to select the 50, and then I'm going to come down and right here at the 618, I'm going to use here, and it's up to you. You could also use the bottom of this candle just underneath, okay, just like that. And we got ourselves a neutral zone that makes sense using the methodology from the down range, which we were all into, we took into consideration, we are still in the bearish trend of that
Yeah.
down range, right?
Yeah.
So what happens is, and now when we put all of this in here and then we start to look at the scripts, guess what else we have right here? And I forgot to bring that up. We have the decelerator.
Hmm.
Lots of confluence going on here. And is this Shant? Is that
Yes, it
you?
is.
Oh, okay. Notice that we have the rally in the inside and the down.
Yep.
Okay, we have a little bit of supply here, but why am I not going to put this top neutral line right here? Why am I not going to do that? The reason why is because we actually the move out of here is not that strong. It really isn't. There's a topping wick here, but
Yeah.
overall it's kind of hanging in there. All right. So the idea here is if price breaks above the neutral, above the decelerator, above the 38.2, that price can move into the supply, and we're using the backside of that supply as a target. If you felt like, okay, so you don't have to follow my blueprint to the T. If you feel like, hey, if I get an opportunity to go long at 254, I know myself and I don't think I could hang in there for $8, right? If that's you, what you can do is use the decelerator, right? You could use the decelerator. You could use the last weekly edge as a target, and you can use the underneath this candle, okay? So I'm going to come up here and I'm going to place a target right here underneath that candle. Also, last weekly edge. Remember, if you have the edges, folks, we can use the past edges for targets, and that's what we're doing in this case. So, blueprint here to the upside, 257, 262, 273. Okay, there's a huge gap in between here, so you have to figure out when you're looking for your targets, where you actually, for you, your personality type, where can you hold on to? Okay, most of you, at least the ones I've talked to personally, you can't hold on for a move all the way up to 273 unless it happens in a day or two, right? So in
Mm.
most cases, you're going to trim or close right around these sections here. Okay. All right. So we have targets to the downside and upside. What's very important here is that you understand how to trade this. Okay. So if price is in the neutral and it pulls down into the bottom neutral and we get it inside and up off of here on a smaller time frame, you can actually ride this up for as long as we stay above the 9 EMA on a smaller time frame, say a 10-minute or a 5-minute. Okay. If we gap up into a target, okay, if we gap up into the target, you're not going to go long. Why
Yeah.
would you do that? This is a supply zone. This
Yeah.
is a weekly edge. This is the whatever and the whatever. We have to wait and be patient. So if we gap up, what you should be thinking is,
Pushing price.
yeah,
Yeah.
yeah, if we do get above the target, cool. Let's just start over with the formations and look for higher highs. Then we use the bottom of the target as a stop, and then we ride up into the top targets,
Got it.
just like we do on normal trading. Now, let's say that we gap up, but we only gap up into the YE or even the top of the neutral, okay? Your thought process here should be the same thing. Inside, be patient, up, go long, stops go in. However, if we gap up into the top neutral or the YE and we start to break down and make lower lows, now guess what? We have ourselves a trade on the inside of this box with a stop above and just ride it intraday as long as you're staying below the 9. Okay?
Yep.
All right. Now, if we were to gap down into a bottom target, the same thing, you have to apply the rules. We know that these are in levels where price wants to move up, so let's not go short right when we hit a target. Okay? Why did you select the 23441 as a target? I don't see that. You say 234?
I believe it was a Fibonacci. Hold on.
So if price moves down into a target here, okay,
That's the 61.8, John.
the 618,
Yep.
is it on here? Or is he asking why?
Uh, he asked why you put it there, and the reason was because after the 50, which is the
Yeah, yeah.
240, that's the next target
Oh,
you're
yeah,
looking
yeah.
at. Price breaks down, so it's the 618.
Yeah, that's right. So right here. Yeah. So if we come down into a target, we need to understand that most traders, they freak out, okay? And they want to go short right here. But what ends up happening is if you're not patient on this, ends
Mm-hmm.
up inside and then right back up. We see this on intraday trading almost all the time.
Yeah.
Like when we have the PMZs and we're like, hey, we want to get long at the PMZ, but it actually comes down to the list and then it starts to go bid, and that was like the best time to take the trade. It's the same scenario here. It's just on a bigger picture. So price is moving down into a demand zone, which is also a target or a trim. The best risk to reward is when we break down underneath these candles or the neutral low, right? And then start to short to the downside. Okay. In this gapping market, it's made it difficult at times because they're gapping into our targets. So it doesn't feel right, right? You wake up on Monday and you're like, crap, man, the market gapped down again. And it gaps right down into our target. But then we have this amazing bounce. And when we come back and look, it works very well. The target does, right? And you're thinking to yourself, man, I could have just used the bottom target. So as we say on the intraday, if we just trade the lines, every line is a setup. Okay, every line is a setup. So we're taking a trade from an edge, we're taking a trade from the neutral bottom. They all have something to do with supply and demand and Fibonacci. Supply is above us, right? Demand is below us. It's the opposite of how everyone thinks, right? So most people want to start getting short in here, but we see price turn around. People want to get, want to get long up into supply, right? It's always the same thing, over and over and over. How we execute the trade, I find, is the hardest thing. All right, let's move over to the Qs really quick. So this would be our setup into Monday. Okay. Now, do notice that this is $9 wide. All right, and that's why I'm showing you how to trade it on the inside as well. If it pops up into the YE again and starts to break down, we can short it. Doesn't mean that we have to stay, mellow in the yellow for $9. Okay. It's just I'm not deviating from my process because the volatility increased. You have to take it all into account. All right. So let's move over to the Qs and see how we did there. And sorry about that. All right. So here's the Qs. QQQ. We have Monday, Tuesday, Wednesday, Thursday, Friday. Somebody tell me this is the Monday candle right here. What was the play here? So going over what we just did and everything that I've taught you as far as broad market analysis, what are you supposed to do here? So that's the Monday. So the Monday open in the yellow. So
Yep.
our play is going to be once it
Long.
right, once it breaks above, and
Yep.
you can see that the WE was actually like the top of the neutral,
Exactly. Yep.
right?
Hmm.
So we break above that and we go long. Why do we go long? Well, I mean, honestly, the reason
If you
why I'm
break it the neutral. Yeah.
yeah, I mean, the reason why I'm going long is because I've been doing this for like this broad market analysis for quite some time now. And when we go back, it works. It works a lot more than it doesn't work. Okay. So that's why I'm going long. That's the only reason I can give you folks. All right. The
Yep.
probabilities are just higher. And so we break above here. We look for target one. And you can see on the first day, it did not happen. The second day is just like classic because we've been teaching this for like, a couple years now. You get the retest, you get the inside candle at some point on a smaller time frame, and boom, comes right up to T1. This is a
Yeah.
great example of why the process works and why you have to respect the targets to the upside. This is a supply zone, okay? And what I used in here, I can't tell you because I can't remember. But if I go over here and look, knowing me,
There you go.
like I said, you can use the bottom of these bodies, but I come down just a little bit. All right. And if you notice, I came down enough to where my
Yep.
line, this is kind of strange, but what did I do here? Remember I
Use
was
it. Yeah.
I was
I was gonna
teaching
say
on
use the
Friday.
top of that.
Y-
Yeah.
Yeah, yeah. So, but not only that, if you look closer, I'm trying to touch all four candles.
There you go. Yep.
Right? So people that like to draw trend lines, the best trend lines I've ever seen are when you can have as much touches and it still makes sense.
Yeah. That's
Okay?
smart. Yep.
Right? So I'm doing that with target. So I can't just say I'm going to put it underneath the body. I'm going to take this whole cluster because all these guys are all around each other. I want to try to find something that touches everything. Okay? So anyways, so price, this is the perfect scenario for this methodology. It breaks out of the neutral, we go long. Okay. We wake up on Wednesday, it gaps down. Notice what happens here, guys. I haven't even touched this. All right. So, I mean, it holds these levels. Now, you could sit here and say, but John, at some point during the day, it did break down. Yes, 100%. And if you want to be aggressive, short it,
Yep.
right? Just know what your plan is. Your plan is to go short here with a stop above this level here, 182.03. Now, I'm not saying your stop needs to be right at 182.03. To me, that's a little ridiculous because it could come right back up and pop you out, and you're like, oh, that didn't work, right? But if you shorted this and give yourself whatever risk parameters that you use, 50 cents to a dollar. So, disclaimer really quick, it's real easy for me to come up here and say, hey, this will work. You just need to use your risk parameters. What the hell does that look like? Like, I'm telling you for most of my trades, I'm not risking. We're not talking about swing trades, but just like intraday, you want to take this trade, you want to fill it. Most of my risks are not more than probably 50 cents to a buck, guys, right? It doesn't need to be anything crazy. There's no reason you should be putting on a stop way up here at $5, you know? So you could short this being aggressive at 182.03. It drops down to 180, 180 and some change. So you make like a buck. All right. Now there's other conditions that are going on in the market at this time. And that's what I want traders to understand as well, is that we're always looking at the ES. That's just my baby. That's what I'm going to look at. If the ES is coming into support, let's just say that right here, when I'm thinking about going short, the ES is actually coming into a demand zone, then I'm not going short on the Qs. Okay. So I'm always paying attention to the ES. I feel like you guys know that. Now, if you want to trade the Qs and you have the scripts, just look at the NQ, the futures. Okay. And at that point, we're underneath the list and things are looking shaky. Sure. You can use that as another tool to help you stay convicted that you want to go short here. But the idea is that this is a bigger time frame. We're doing blueprints on a bigger time frame. And yes, you can trade them intraday, but they are better used as the week. Okay. So we're going to stay long here until it hits our target or until you're happy. All right. Now I understand that the gaps make it difficult. You may say something like on Monday, hey, John, it closed up here, but we're not there, man. But the bottom of your target's at 182 and it closed out at 192. I'm not willing to put $10 of risk on. Now, I don't look at it as $10 unless you're shares or unless you're at a Delta 100, right? If you're out of the money calls and you're buying a little bit of time, then a little pullback into the WE here or the top of the neutral, because if you're going to stay long over Monday night, you should be thinking, hey, I'm okay with a pullback as long as it doesn't break the neutral. It comes right down to the neutral, folks. Look at this. I can't make this up. I have not touched this. It comes right down and it bounces right off of there. Okay. Perfect demonstration here. Now let's just get into how are we gonna set this up for this week. Okay. It's gonna be the same exact way. Now I'll tell you, when I'm setting these up, I try to stay uniform, meaning if I if I traded sorry, if I just did the blueprint on SPY and we use this range and then I use this range, I should do the same thing for the Qs. You guys understand that? So I don't want to my methodology needs to be the same on every single thing here, especially when we're talking about the ETFs. So on this one, I'm going to take into consideration this trend and I'm going to take into consideration this trend. All right, so let's go ahead and do that. Fibonacci's, I'm going to start here at the top. I'm going to pull it down into the pivot low right there. Now let's apply the methodology. Anybody can talk. Sean, you don't have to be the only one that talks, but somebody has to say something. Let's let's look at this and let's apply the methodology of the fibs. What can you guys
Yep.
tell me?
Top level, I would say would be the 38.2.
Okay. So we closed out like literally just right under 38.2, right?
Yeah.
So it's the bearish trend.
hmm
And just to get ourselves familiar with the methodology and how it feels, let's just talk about what else happened through the week. So remember, in a downtrend, if you guys have watched my fib video, we look for price to go bid and we look for the 50. Okay.
hmm
Perfect. Did just that. And
Yep.
then boom, stopped in its tracks, right? So, all right, let's take these levels into consideration here. And we know that we have this body here. We have the 50. The 50 is going to be resistance until it's not. We also know that 38.2 is the bearish channel. All right, so I'm going to move this box out of the way. I'm going to take this level here and I'm going to actually move it just above the 38.2. And the reason why I'm doing it just above, folks, is because this body to the left
Yeah.
of this candle, okay? And also, what else do we have there? The decelerators, right?
Yep.
All right, so there's a lot of resistance above us, believe it or not. All right, but what I'm going to do is I'm just going to come to that body, okay, right there. And what I'm looking at is that, let me kind of, this body right here, folks, okay? So I'm putting my neutral there, so it's above 38.2. I'm giving myself a little bit of room, all right? And then I'm going to find on the bottom side of this what that looks like where we are. All right, so again, we're going to attach the Fibonacci's here. We're going to come up to the top. All right, now what's that look like? Price rolled over, but guess what? It's holding on to the 38.2,
Mm-hmm.
right? Just barely. I mean, it's just
Yeah.
underneath it. It's just underneath
So
it.
then, so according, and if I'm speaking ahead, please
Mm-hmm.
correct me.
No, no, go.
But you would look to, you kind of play like a game of magnets, and you
Yep.
have the most, I guess, telling line would be the one closest to these Fibonacci ranges. So would
Mm-hmm.
you put that line at the bottom of that daily close of the, not the tail, but that body?
Mm-hmm. So,
Got it.
so before I actually place this one, because of sentiment and because of weekly ATR, I feel like that's really important, Sean, and anyone that's
Yeah.
listening. Okay, it's important that I take that into consideration because if my neutral, it's because if you can come into the Discord room and get into the voice channel there, that's where people can talk and so forth. Yep, no problem. So what's going on here, all right, is that I got to take this box into consideration. So let's just say that we're going to put this up here. Okay.
Yeah.
It's 183.42 by 186. Let's just call it $3. The weekly ATR is 12. Okay. So basically how I look at this, simple math, it could pop around $4 and some change on the daily.
Got it.
Okay. Every day it's going to move around about $4 to the upside, downside, whatever. It's very volatile. All right. So I want to take that into consideration where I place this because for me, I actually have two different options here. I can place it at the 38.2 or I could place it underneath this body, but it's already,
Mm,
prices already come into that body. So we're actually going to move it just down a tad, like you said, underneath the
mm.
body.
Got it.
Okay. So I'm going to put it right here. We know that it's already,
So that's your buffer by
yeah,
putting it just underneath. Got it.
right.
Okay.
That's a buffer so that I'm not just using fibs. So I'm using fibs to help me, but I'm also using, inside and up, down and,
Yep.
inside and down and so forth. I have to be paying attention to everything around me. So we're going to
Got it.
take this. Now I like this one because the damn box is not so wide, right?
Yeah.
So I mean, this is the old days, man. This is 2 months ago. It was beautiful, right? We didn't have to have these huge spreads. So even overnight risk is not bad when you think about this. So, if we get a move out of here on Monday, I feel a lot better going long overnight because this is
Yeah.
only $3 here, you know.
Exactly.
So this is our neutral. And now a couple things I can do. Again, I can leave these fibs here and give myself some targets. In this case, I'm actually going to use the previous WE, the weekly edge. Okay, and the reason why is because, well, from the top of this 186, that gives me another $3. That makes about sense. 3 to 4
Yeah.
bucks. Weekly ATR is 12. It makes sense that we can hit this. The other point here is that this is a rally, an inside, and a drop. We know that this is a supply zone, correct? So if we were to draw it, it looks like that. Okay. Now when price left here, guess what? It was tested, was it not? Right? So
Yep.
this is not a fresh zone. So I'm going to use this as a target. And then I'm going to use the top right here, double top. I like to envision and see all of this because if it works and we go to the upside, guess what we're going to create? A little cup here, right?
Yep.
We're going to reject here, probably use the backside of the supply zone, and then move back up here. Okay, just like that. All right, so we have our top targets for right now, 189, 194. Now, if that's too wide, you can come in here and you're going to use the top of these candles right there. Okay, so give you your second one. So these are all targets to the upside, and all I did was use the top here. Okay, to the downside, again, I've already done this right there. We're just underneath the 38. We're going to use the 50, but before we use the 50, we look down and to the left and see if maybe we want to use right before it or right after it. Okay, I love that. Look, the bottom closes on the 50, it ticks back into the 50, and then we're making higher lows. So maybe I don't want all the way down to the 50. So what do you think I'm going to do here?
The tails, the
I,
bottom of the tails.
right, yeah. So I'm going to use the bottom of the tails, but I'm also going to try to touch all of them.
Yeah, exactly.
So I'm just
Yep.
using my crosshairs, and I am about right here touching
Yeah,
them all. Okay, so that's my T1.
there you go.
All right, and then I'm going to come down here, and I'm going to use this tail or this wick. Okay, so you can see the Fibonacci's aren't quite what I'm using for targets on this one. But if you're new, you can use these. I'm trying to explain to you why I personally am not going to use the fib. Okay, because I have to take into account that we're making higher lows here. So even if we pull back a little bit, okay, we might make another, this dip could be really shallow this time. And then we're going to move up just like this. And once we take the price out of here, we'll be looking to the upside. Now, let me ask you this. I put some fibs on here. 23.6 is there. What happens around the 23.6 is it becomes bullish again, extremely bullish. Okay. It's
Mm.
already been tested once. Keep that in mind. So I'm really looking for that breakout in here into the supply. Okay.
John, where'd the second bottom target come from?
So the second bottom target here, instead of
Yeah,
using the 618, I'm using the bottom of this wick here.
got it. Okay,
Okay.
thanks.
Yeah, because remember, if I take supply and demand, basically, without getting too heavy into it, we're on a daily time frame. And if I were to take this one candle right here and transform it, that's what we always say. Like you can take a candle and you could break it down or drill it down into smaller time frames. Then you have all these little baby candles that create supply and demand. So the faster way when you get more advanced is that you just use the wicks, okay, or use
Yep.
the bottom of the bodies. It just really helps on time. I don't really need to drill it down that much. So that's where I got that. And if you want to go even lower, okay, then we're going to use, I love the 618, so I would definitely know where this is, but check out this wick right here. I would use this as my next target, okay, just like that. So it looks like this when you're finished. T1 to the downside, 181.34, 178.11, and then down here at 174. Keep in consideration where we are in relationship to the edges. Okay, I'm never forgetting this. All right, S curve, where are we? We're not quite low on the curve, right? But we're not
Mm.
in the middle either. So I like the probabilities of a dip buy in this area between the edges and then looking for a move back up here. All right. If we were high on the curve, we'd be thinking, and plus, not only do we have the edges here, we have a supply zone right there. I love the
Yeah.
edges, man. Freaking love them. I really do. It really helps out here, big time. So we're lower on the curve. We have our neutral. Boom. That's it. Okay. Now let's go over here to, we'll do IWM next. And let's just talk about it. All right. So I'm showing you guys this on the daily so that you can understand how it actually went down when we open up and so forth. All right.
Oh, sorry.
Oh man, what do you live in a mansion? That was a that's the kind of doorbells you hear in like Beverly Hills, man. So Monday, Tuesday, Wednesday, Thursday, Friday. Okay. Price moved down into the neutral and then broke above. We take the trade to the upside. Okay. We hit the WE, the weekly edge. Remember, all this was there before price. And then on Tuesday, we actually hit the target. Note that the target worked very well. If you're getting long at the target, okay, now you understand why we don't do that. We look to trim or close here, and then we can reestablish. Hey, like sometimes I'll see traders in the room say, "Hey, John, what do you think? Like, should I get long here?" My question, or here's my thing, is that if it shows you on the intraday that it's got inside and ups off of here? Sure. Okay. But on a rejection, I'm thinking no. The market's weak, right? We got to get into this different mindset that we're going to take profits when we see them and not hold on for hope. All right. Very important that we understand that. So the blueprints are working, but these aren't the old days where we're trending up. These are new days where we trend up for a day and then we drop. Okay. All right. So let's take into consideration that this did work. Once it broke down, it gapped down, it held the neutral. And once it broke down below the neutral, I want you to see what happened. It didn't hit my target, but it did come down right, within pennies of the monthly edge. Okay. So this worked on an intraday trade, would have been like Friday. This would have worked for you. Okay. But let's go ahead. We're going to apply the same methodology that we just did on the Qs and the SPY. And let's see what we come up with. Now, I'm going to keep these bottom targets just for right now, just to see if they still are okay for us. All right. So again, we're going to use the most recent range. And you can see it here. This is the down range right into there. And then we're going to use this up range. All right. Another thing to note while we're here on patterns, it definitely looks like an H pattern. Okay. All right. And let's come up here into our range, which is right there. And right there. All right. So this one looks a little bit different, right? IWM's been pretty bearish. So what can we note from here? Where price is right now, what can we say?
Well, it's underneath the 23.6, which
Right.
indicates that it's confirming a bearish.
Yeah, and extremely bearish, right? So the other ones that we looked at were just bearish, meaning they were right here at the 38.2s. This guy's already said, nope, I can't do it anymore. Now, I want you to also note, remember, always take notes into consideration. Don't get too like hyper focused on right now. Make sure that the methodology is working. So notice that when we picked the pivot high into the pivot low, it moved right up to the 38.2, folks. Okay. This is a bearish trend. We look for it to stop out here and then boom, right back down. Okay. Now it's signaling saying, hey, I can't even stay bearish. I'm extremely bearish. All right. Just something to note. So what we're going to do, we're going to move this down into the 23.6. Okay. Now I'm going to give this a little bit more room. I'm actually going to come up to this middle candle, and that's been kind of the trend, right? That's how we've been using this. So we don't want to deviate. Okay, so I'm going to use the wick right here. And it gives me a little bit of cushion. Okay. You don't want to be the guy that's just trading strictly off of fibs and you're like, I'm going long, and then it hits this wick and straight back down. All right. So we have to give itself cushion, and especially because we're in volatility. All right. So what am I going to use for the next bottom neutral, folks? This is a little bit different. Instead of Fibonacci, what am I going to use?
Um,
Come on, y'all.
I would say use the monthly edge.
Boom. There you go. Perfect.
Yep.
So we're going to come down and we're going to use the monthly edge. Perfect. All right. Now I want you to notice right in here, a little bit of buying pressure right in there. So it's about perfect. Now we've already tested in here. See, when price left, it came back and tested in here. Now price is coming back down and testing again. I love this target. Okay. So we're going to put our neutral in here. Is everybody else following that? Anybody else that's listening that's like, huh? It's okay if you don't follow, please say so. Or, jump on the mic and ask questions. Open room. All right, so we're going to put the neutral here. Boom. I love this neutral. It makes sense to me. All right. So just like in the fashion of the last ones, guess what? I'm going to use the last weekly edge. Okay, or do I want to use the 38.2? In this case, I'm actually going to use the WE because that's what we've been doing. Okay, and then I'm going to use the 50. If you look up at the 50, notice that it is confluent with the bottom of this wick over here. Okay, so I'm just going to come right about there. I don't have to touch the wick. Again, I don't need to be right on target. I need to be close. Now let's look at the downside.
One second. Sorry, you already deleted the fib. I wanted to ask the candle. Can you bring back the fib?
Yeah,
Just
yep,
Control Z.
just like that.
So the
Yep.
place where you started your 100%, the candle one before it has a another high. So why did you select this? Yeah, so this one has a higher value,
hmm So the way that I look at
right?
it right here, watch this. So this trend here is right there, and then it flattens out, and then this creates my next trend. This is something that I try to explain. I feel like most traders can feel this. This candle means nothing to me. This is a trend here. This is just a pullback, and then the trend starts here. Okay, that's how I look at it. So each time, okay, just like this, when I'm measuring to the upside, same thing. Okay, so I don't look at the point that it's a high. I'm just using this because it flows well with this. This guy looks out of place. Okay, so
Okay.
so
Okay.
remember, it's a little like unconventional. It's just different how I apply fibs. All right, and I try to let you guys see it and feel it. Like, to me, this is a downtrend, and then this candle here creates this little uptrend. And then this guy is just a pullback. And then this one, again, starts it over. Okay. All right. So let's start from the bottom here. We're going to come up to the top like this. And then I'm going to look. Okay. So we have the ME and then we have the 76.4. All right. I love the 88.7. You guys should know that. I'm going to put my target right down here, but this is the IWM that we're talking about. What is one thing that we need to take into consideration? The ATR when we're making targets. It does not make sense to create a blueprint where you have a target that might be, $15 away when you're only moving $10 a week on average. Okay? So let's look at these numbers. If I use the 76.4, it's at 100.95. And my bottom neutral is 102.21. So let me ask you guys a question. Would it be okay or would it be feasible to use the 76 as a target, even though it's so close? I would say yes, okay? Because we're talking about the IWM. It doesn't move like the SPY. It doesn't move like the Qs, okay? So it's kind of hard for me because when I find targets like this, I think, traders are probably thinking, what are you thinking? You should be thinking, I probably don't want to go short here. It's not far away for me, and we might actually get a nice rally there. All right, so I'm more on the patient side. When I create a blueprint that looks like this, where a target's right there, I would much rather just, first of all, I don't really like IWM. All right, but if I would much rather wait here and then see if I get that inside candle and then trade it up over the ME. And then we trade it within the box, okay, like this. All right, but these are viable targets. So we're going to use 100.65, and then I'm actually going to use this last WE here. This last WE connects with all of these wicks, and it's already on my screen. It makes it easy for me. So $98.41 from 102, not bad, okay? And we can have further targets to the downside. What are we going to use in this case? No fibs. We're going to use a double bottom. Okay, right there. 95.72. What is the math between 104 and 95? That gets us pretty close to ATR, correct? I'm pretty sure. Okay, so 95.72 minus the 104.62. And you're coming in just around $9. Okay, so pretty close. That's all we need for right now. And then when you step back and you look at this, We have the H pattern, boom, trim. If it creates, it goes back up and starts to make higher highs, we're done. If it starts to break down, boom, boom, and then the extension down, okay? Now, we don't see anything here, all right? So what's important is now I got to go into a weekly candle. And what I mean by I don't see anything there, I don't have any other wicks to mess around with. So this thing is on the verge of collapse, right? That's how I look at it. So
Yep.
now I had to switch over to a weekly candle. I want to look down and to the left. Guess what? We have this wick down here. Okay. 93.67. Okay. And if you're into math and you like doing that, 104.62 minus your 93.67, $10.95, folks. That's your ATR. Okay.
Wow. Yep.
So, and it all makes sense, really, when you're looking at it like this. Could be a double bottom and right back up, man. Who knows, right? Or any of these lines can actually work. All right.
Hey, John, this might be a dumb question, but how come no target's ever in the neutral box? Like, what's the thought process there, like, about making that box with
Yeah.
nothing
No,
money
no,
in it?
no, that's a great question. So if you wanted to trade it, right? So when I do the videos and we were just talking a few minutes ago, it's hey, you can trade the neutral. You in this case, you use the bottom line as your line in the sand, or if we gap up here and we start to break down, we're going to use the 110.17 as a neutral line, and then we can trade it just using the 9 EMAs as long as you're staying under, or we're going to do something like this, right? So this is why I love painting the picture on the screen, because now we know where all this stuff is. On an intraday, let's use the 30-minute candle, okay? Let's go like this, right? Now, how are we going to trade in here? So I'm not sure who asked me the questions, but do you have access to how to find targets in the library?
Yep,
Okay. So this is where you use that. All right.
got it.
So from here, if you know the monthly edge is here and you know that the bottom neutral is here, we're going to, inside and up, we're going to take a trade from here. Now, where's your target going to go? Right? We're going to look up and to the left, and we're going to use the same thing that we're using on higher time frames. You can use big body candles. You can use, this big body candle here. We could go under here. This could be a target. We could use this zone right here as a target, which has already been tested. Okay. So on the way up, boom, target, boom, target. Okay. Just like that.
Yeah, you're just breaking down the time frame for it.
Yeah, exactly. 100%.
And John, confluence-wise,
Mm-hmm.
to add on to Pedro's, I guess, clarification,
Mm-hmm.
the newest intraday script that you just provided, if you look at the top edge, it's
Mm-hmm.
actually confluent with where we're putting the top of our neutral zone. So I
Mm-hmm.
guess trading that neutral zone, we can kind of view it as like as the intraday edges,
Yeah.
in which we can wait for price to get in there
Mm-hmm.
as like a scalp, and if we
Mm-hmm.
see it breaking down, we can trade it to the bottom of that edge, and vice versa.
Right.
So,
And that's the thing, is like every single line is confluent with some sort of supply and demand, just on different time frames and or Fibonacci. See, it used to be a lot of people place Fibonacci, but it's not really in relationship to supply and demand. I know that because when I first started it, it never quite worked for me. I'm like, oh, I'm going to take this trade because it's at the 618,
yeah,
and I'm like, that means that it broke the trend. But matter of fact, I didn't place it right, so I didn't realize that the 618 was actually in the middle of supply, right?
got
That
it.
just didn't make
Yeah.
sense. In this case, every line that's on the chart is a trade. So let's just talk about that for a second. But what do you mean, John? Right? Price breaks up. Let's just say that this is my line here. Price comes into here. If you notice here on a smaller time frame, it's actually a supply zone, okay, on a 30-minute.
Yep. Yep.
So what do I mean by that? That means if price comes up into here, we just wait patiently. It's supposed to be supply. You know that because I have a target here, and it's above price. And once it starts breaking down right here, boom, stop goes in, and maybe you get this killer run in your direction. Okay? You don't know unless you execute the trade. Down here, price comes into the ME, same thing, let it do its thing. If it comes back up on you, inside, up, stops go in, we look to trade to the upside. Remember, guys, anything that's on my chart, my blueprint or live, anything that's above us is supposed to be resistance and or supply, and anything below us is support. Okay, so we're always looking for the candle formation. It may not feel right at first, and when it comes up against you, you're like, man, I thought this was supposed to be resistance. Okay, give it a little bit of time, and then
Yeah.
you come back and you see this, like, oh yeah, I should have waited about 10 minutes, right? So this is why we use this process to take the trade after we see some sort of formation there. It's okay to front run it, just know what you're doing as far as allocation goes. Let's go to DIA really quick. This one I believe was different than all three that I just showed you. I believe so. But it's great to talk about because it gives you a different look. So again, I haven't changed these. These are all from Friday, or sorry, last weekend. And we have Monday, Tuesday, Wednesday, Thursday, Friday. Can somebody please tell me what was the trade here? This is kind of like what you just asked. We're in the neutral. So we pull down to a line. Just think of it that way. John's blueprint, there's a line below price. We're looking for support until it's not. Okay? It comes down into the EMA. It comes down into the bottom neutral line. At some point, I guarantee you on a smaller time frame, it was an inside and up. And we move and we trade it to the upside targets within the neutral. Matter of fact, right, moves right into the WE, comes back and tests, and then straight down. Now here, this one was very difficult because why? I need someone to see this so they understand because everything that I just said is kind of true right on this DIA. This is actually probably the best learning tool right here. Can somebody tell me, what happened here? So this was Wednesday. What do you do on Wednesday when you see this? What's your play? I want to see if you guys are getting this or not. There you go. Okay. Our first reaction, most likely, is that you're going to be panicked and you want to go short, right? But you need to be thinking this is a bottom target. I'm going to give it a little bit. You should not be going short right into a target. Most likely it'll go against you. And at some point, it actually looks like it did go against you right away. Okay. So just be thinking about that. Bottom targets. I mean, this is a beautiful example, guys. It really is. And just like this, when it pulled down into the bottom neutral, it came in, pushed back up. Okay. So all of these are targets. It depends on how you open up around them. If I gap down into a bottom one, I'm thinking about possibly going long, but it's not going to feel right. I guarantee you. It's not going to make sense to you.
Yeah, John, it feels like gaps should be viewed almost inversely as what you would think FOMO. Like
Right.
you just kind of like, if we gapped up higher, look at the nearest shorting opportunity. Gap up lower, nearest long opportunity.
Right. Yeah.
Yeah. Okay.
Yeah. The probabilities are higher, aren't they?
Yeah.
I mean, in most cases, they have been. Exactly.
And so to continue past the target, John, you're looking for some kind of inside up type of move off the target or inside down type.
Yeah, exactly. So if we were to come down into, let's see here, this was Wednesday. Let's just come over here into a 10-minute. And let's find Wednesday. I think this was it right here. Let's make sure. Is that right? 3:30? March 30th? Was that Wednesday? Or is that Monday? Was I looking at
No,
Wednesday? I think it was,
Wednesday would have
yeah,
been.
I think it was a yeah, Monday.
Wednesday was the first.
Okay.
The 30th was Monday. Yeah.
Okay. So here is Wednesday, right? And you
Hmm.
can see here we had at some point, you have your inside and up. You get a signal here too, inside and up. So they don't look big or anything like that, but you notice here too on the gap. So this is the one right here, sorry. So on this one on Monday, we gapped down into the target okay? And you
Mhm.
get your inside and up,
Yeah.
right? And so, and then you had your WE, you had a target right there, which would work
So,
perfectly.
but to like get short there at that target, right? If you wanted to keep going short, you maybe wait for like an inside down, or what's the move you're waiting for to
Yeah,
show the trend to
a 100.
continue?
Yeah, you talking about when it came down to here, correct?
Yeah, exactly.
Exactly. I love that point. So you're not going to go short here because you don't have it inside and down. And that's the thing about the process that should keep you from making a costly mistake. Not always, but when you do, it should be limited, your risk and so forth. But here, like he's saying, it would have been different if this candle was created and then right here you got this little inside and you're thinking, okay, I don't know what's going to happen here. It's either inside and up or it's not. And then you get the down, then you use this as a stop, okay? And then you look to trade it down and ride the EMAs for as long as you can, okay?
Yeah.
So perfect example. Thank you.
So what I'm kind of seeing too is like you wait for the trend, whatever way to stop, get some type of like stalling candle, like an inside candle, and then you're
Hmm.
really waiting to see what happens based after that.
Right, exactly. And then, I mean, on top of that, you start getting more tools that really help you, like a flush flow, like this guy right here. It flushed everybody out, but if you look pre-market, it came right into our little demand, our green arrow here. And, for me, if I'm watching this on the day, I'm like, oh, nice, man. Inside. Now we're going up. Now we move
Yeah.
above the PMZ. We add into the trade. And then here is target.
Mhm.
Okay. So if we come back over into, I think it was DIA that we have not created the blueprint as of right now. Let's go ahead and do the same thing here. I have my brain music on in the back. I don't know if you guys can hear that. It's good stuff, I'm telling you. Brain waves when you're doing the blueprints, man, you feel like a genius. So here we are, okay? Same thing here. So you had asked before about the candle pattern. Same thing here. This right here speaks to me. This candle here, this is the trend right here. And then we have trend here, okay? So we're going to measure those. We need to take into account where are we? Here's the monthly edges. The YE is above us. I love that the YE is actually confluent with the monthly accelerator, so price does get above here. It could be a huge move. And I love that the ME is confluent with some supply. So everything looks really awesome on the chart itself. Let's go ahead and measure. So from our top candle, sorry. Just like this. All right, so you can see here, price moved down. Where are we currently? 38.2. We're in the bearish channel of this down trend. Okay, so I'm going to take my top right here, and actually we have the bottom there, right there. I want to see if the placement needs to be right on the fib or somewhere else. All right, in this case, I'm actually going to move it up just a tad to underneath the body and the decelerator. You can see the confluence there. Okay, hopefully you guys can see that. Let's zoom in.
John, when you said the
Yeah.
decelerator, is that the arrows?
Yep, it sure is. This is the
Okay.
accelerator. This is
Yeah.
the decelerator. Okay. So I'm going to place this here. It's confluent. It's right above the 38.2. Once again, this has been the trend that we're using on all the ETFs. So we're going to come up just a tad. I'm going to use that body and the decelerators right there. It's going to be our top line. Now, if price were to break out above us, this is actually going to be a little bit different. We've been using the WE. I'm looking at the body. Okay, I'm looking at this body here, and it worries me. There's selling pressure here. Most of them have been pretty much confluent with the WE. This one's going to be a little bit different. So I have two choices here. I could take this line here and just move it up to the body, and I need to look at, how much of a difference is that? 217.60 into 219. I'm actually okay with 219. So this one's going to be a little bit different. I'm going to leave it at 219. All right. Then my top target above this, I'm going to come up into the wick. Okay. This wick. And because it's been pretty much sell the rip, I'm okay with the target being before the 50 here. I'm just using this wick. Anything above that 50, then I'm going to come up. This is where I'm not using fibs. I'm using candles up and to the left. Okay, I'm looking over here. I got the YE, and I'm okay with using right there, which is confluent here, and also the YE. Okay, come right there. Now, sometimes I want you guys to understand it's not a perfection, it's not a work of art until you're completely done. So you can change things up. There's nothing wrong with it. Once you get finished with it and you start to look at it and you go, oh shit, man, my neutral box is like $20 wide. That makes no sense. I missed something, right? So then I'm going to come over here and I'm going to use this pivot low to pivot high. And let's look at it this way. All right, guys, so what do you see here?
Right above the 38.2.
Right. So let me ask you a question. So we're doing this because it's called broad market analysis. So far, we have done all four of the ETFs.
Mm-hmm.
What are you guys noticing? What would be your analysis so far?
It's showtime period.
Many
If we
of
get a
them are
pop,
in the bullish channel in the short term.
Mm-hmm. Exactly.
yeah,
Right. So short term, we're in a bullish channel. Longer term, we're still in the bearish channel, but we're literally right on the cusp.
yeah.
Right? It's like so listen to that. This like honestly guys, my hairs are standing up. This is where like I get super excited because I hope that everybody starts seeing this. So what is that? What do you see? What do you feel like could be coming up this week? If we're like stuck at uh, you know, resuming a bearish channel or breaking into a bullish channel short term, what can we expect?
Fireworks.
Yeah, fireworks.
Yep.
One way or another, something's gonna happen.
Yeah.
Or unfortunately, I think the VIX is dropping. I haven't even looked yet. It could be a chop zone. You see what I'm
The
saying?
VIX is dropping pretty dramatically.
Yeah. Things could be it could be a little bit of a chop zone. Could be an
Yeah.
iron
The
condor
VIX
kind of
the VIX
week.
has dropped to 50, which is
Yeah, yeah,
oh my
exactly.
gosh.
Exactly. That's so funny. All right, so when I look at this one, this is super wide, right? I'm gonna come up here. I'm gonna use the 23.6. Actually, let's come down here. We're gonna use this. This one's gonna take a little bit more finesse, guys. All right. I have a choice here. If you can't follow this, please say so. All right, I'm not doing a box that's 208 by 219, you know. It's just a little wide for me. So what I'm actually going to do, I'm looking at all my different options here. I can just use the 23 and the 38. Okay, that makes a little bit more sense to me. All right, and I'll show you once we get finished here. I'm gonna come up just a little there. And it's okay once you learn this if you want to change it up a little bit. Because you might say, well, I like it better a little bit more above the decelerator or whatever. That's okay. I think that you guys, the idea here is that you're understanding where my mind's at. You don't have to be like me. You don't have to set it up like this. It's up to you. Okay. Now, I have this spread here, 208 to 215. Now I got to create some targets. Now I'm going to simply, instead of using the fibs, I'm going to come up here and I notice that we have this rally inside and down. I'm going to use the bottom of that body. So I'm going to come up and use that. Okay, that's target one. Target two, the top of this wick. See how things are changing here, and that's okay. I'm telling you, some guys, I've woke up before and I've done this, and I'm like, man, they're just not trending with me, and I'm like, what is going on? And it is a work of art. It takes a little bit of time, but once you get used to it, I can pop these out pretty quickly. But at first, it's a puzzle. All right. So to the downside, I'm actually going to use fibs again. Okay, right here. And I'm going to use the 50. I'm going to use just right before it. Okay, and then I'm going to come down to the 618. And I'm actually going to use the 618 here. And the cool thing is you guys get to see how we're making these and how they're going to work next week. All right. All right. So the idea here, if the DIA, the Dow Jones ETF, decides to move up, we might be thinking it might not be a big pop, okay, compared to what we're used to. You guys see what I'm saying? Now it could be, again, risk to reward. If for some reason it gaps down into the bottom edge here, you're gonna go over to like your 10-minute time frame on the daily and think, hey, maybe I want to get long here. Maybe we're just gapping down into some demand. So you pop over into the 10-minute and you wait, right? And if we start to get that inside and up, then we're gonna trade into the upper. So now you're making money from the 208 to 215, and if it breaks out from there, 219. Okay, different plays here, depending on if we gap down or gap up. All right. So this is the blueprint going into Monday for DIA, SPY, the Qs, okay, and IWM. Now let's go over to the P call. I think I usually do the skew, but let me make sure. Let me come up here just really quick. Can't remember which one comes first. Yeah, P call. Okay, cool. All right, so what we do on the P call is that we come over here into our edit studies, and I want a 10-day. See right here, moving average exponential 10-day. And I want to make sure that's on. I want to make sure I can see it. And let's see if it pops up here. And there it is right there. So basically all I do is come over here, and the bubble is really difficult to see sometimes because you got a lot going on in there. All right, but I can gather it's right around the 103. Yep, there's a bunch of stuff at the 103. So right now the P call is 1.03. Okay.
John, would you mind explaining a little bit what the put call ratio is and how that benefits us for the broad
Yeah,
market?
look, I like to break everything down into like layman's terms, all right, instead of trying to get all crazy about it. It just means like once we start to move over a certain amount, all right, it's basically saying everybody's fearful. All right. Lots of
Got it.
people were on the put side. I learned this from John Carter. Okay. I just changed the numbers up just a tad to fit me because I found that he was a little too early a lot. And, price can stay overbought or oversold, right? And so I fudged the numbers just a tad on my end to give me a little bit more breathing room. Okay. So basically, you start thinking once we pass like a 90, all right, that people are just too heavy on the put side. And when the market is heavy on the put side, what do? We bounce, right? I mean, that's sentiment. Everyone's starting to get, they've been short for so long and so forth, and then we get those bounces, and then they get creamed. So
So again,
yeah,
it's like this inverse thinking. It's like
right,
gap up, look for short.
exactly,
Everyone's putting puts, they're gonna get burned.
right,
So that's the frame of mind that I'm trying to tailor now. Because
yeah,
right now I'm thinking too much like a retail. I have to think more of like how the market's moving and who's it's actually flushing.
right, exactly. Or I mean, just think about it, and like what you're saying, but also it just makes sense. When everyone starts to get fearful, when all things have come down into demand, all retail is buying up puts, and then they pop it for 2 or 3 days, they get smoked, right? Even if they have long dated puts, they get out for their losses, and then 3 days later it drops back down to where they entered. That's kind of the market we're in. All right. So everything that we're gauging here, it all actually, you need to start seeing how it comes into existence for our ETFs, right? So our ETFs, we all came to the conclusion that, hey, I think something big could happen and or we could just go sideways. Okay? Which kind of sounds like every day, but it is showing a little bit different on the methodology. Like I feel like we're right on that line, folks. All right, so here we are again. We're right up here, a high P call. Everyone's on the put side. And then I want to come over and I want to come into, uh, the internet just really quick and see what I have over here. I just go over to the fear and greed index. Okay. I just want to see where it's at. All right, so it's at 22, extreme fear. So I know that it seems obvious, but when you start doing these things and you start filling it out, it starts making more sense. It's at 22, extreme fear. It's going up just a tad. The market, for the most part, the participants are short and puts. Okay, we following that? I know it's very trivial, right? It's like, wow, John, that's not very.
So with the P call, John, is it if it's above one, it's they're heavy in puts, and if it's below one, they're heavier in calls?
Yeah, so what I'm looking actually when it starts to drop that, see this red line? 75. My numbers, okay, my numbers are $1.75. So when we start to get above one, I need to be thinking delta 30 calls. It doesn't have to be 30, guys. You can make it 40, you can make it 50. It depends on your risk. But what you're thinking is I'm buying out further dated calls because we're getting at extreme levels. Okay? And then as we drop below 75, everybody's too bullish. Okay? And if you notice, when we get at these levels, look what happens. Okay? And you can attach a SPY chart to this and really see how it all jives together. Okay? So for right now, we're at that 103 level. Everyone's on the put side. Most are on the put side. We got a fear and greed of 22. Now let's go over here to the skew. All right, you need to look at this on a weekly chart, folks, not a daily, weekly. Okay? All right, check this out. These are my numbers here. All right, when we start to break down, okay, down below in this area here, below 122 or so, okay, especially down here around 115, 116, see the YE here? This is where we're thinking risk on, meaning we want to go long, okay? Again, SPY, Delta, 30, 40 calls to the long side. And then as we reach peaks into and above, 125, 130, I got mine right here around 131. Then I'm looking at protection, okay? Now, most of the time, these are all going to come together synergistically. You're going to have your skew, your P call. The charts are going to say something to you where it's like, hey, it looks like everything can drop hard here. Right now, it's telling me on the skew side and the P call. Skew side saying, hey, we're not too concerned of a standard 2 deviation move. So hedge funds are saying, we're not really too concerned right now. Up here is where they're saying we're concerned. Okay? Yeah, Pat, I am. Sorry. I just saw your question up there. So here on the skew side, all right, they're saying, hey, we're not too worried. And the P call's showing that a lot of people are still worried. All right? So there's a little bit of, difference here between the two. Just to understand that. All right? Now let's move over into the gold. All right, let's get into GC real quick. I don't know why I put a dollar sign, sorry. All right, so this is our blueprint from last week. So again, guys, just to summarize real quick, the only thing I'm looking at P-call, I'm trying to see where retail is, man. So basically everyone's scared. Everyone has a bunch of puts. Hedge funds are saying, we're not too concerned about a 2 standard deviation, which really says a lot to me because everybody else is calling for test of the all-time lows, right? of the March lows. You guys see what I'm saying? So it's a little, a little confusing at the moment, which makes sense when I look at my ETFs. Everything's a little sideways. All right.
So it almost seems like retail is more positioned for this to continue down, and hedge funds are more positioned for a greater bounce from here.
Yeah, they're more like open to the idea that maybe it's not too, we're not too concerned, which is just, if anything, it's entertainment. Like I'm thinking like that's kind of interesting, right?
Yeah.
So, but it also makes sense, right? Retail is always like super sketched out. And I mean, news is really a big deal right now. So check this out, guys. So this is, again, I haven't touched gold. All right. And this is your blueprint from last week. This came up at some point. It broke down and hit all three targets. Pretty cool. All right. And almost to the tick. So this methodology, if anything, once we get to this point, you should be thinking, damn, it's pretty cool, right? It actually works. It's weird. So the way that we want to set this up, same thing. Let's look at this. This is going to look a little bit different. Now I'm going to keep this red box up here. I've had this for quite some time. It's some supply that's from a long time ago in here. Okay, that's all that is. So I'm going to leave that there. I'm going to come over into the day. All right, let's just look at this for a second. Look at that inside and up off that target, guys. You see what I'm saying? And look where it went up. It went up above the accelerator. Pretty cool. All right. All right. So how are we going to do this one? This one looks a little funky. These are day candles. All right. We're going to do the same thing. I'm actually going to use a little bit different here. I'm going to go into this pivot high here, down. Just do that really quick. Okay. And let's just address where are we? This one's kind of nice because it's not the same as all the others. All right. So we're at the 618. Notice how it, this is the trend change. Can it get above the 618? So what do you think I'm going to do in this one? Anybody?
Upper neutral box will be 618.
Yep, exactly.
Got it.
I don't know if I could just find the lines. It's like the hardest thing. There it is. Let's see, hiding under there. So notice there's a base candle to the left, that little guy. That's right there. I'm going to actually come up just a tad, right above that.
Got it.
All right. And then down here. So here's the thing. This is a little bit different. I don't really need to use another Fibonacci here. All right. We created demand here, inside and up. All right. This, if anything, this is a target. So I'm going to put this right down here to my demand zone. Okay. Or the 23.6. In this case, we know that we have sideways action. If you watch the video, this is the bell curve, the 50. And what happens around the 50 is we usually chop around. There's indecision. Okay. There's indecision because at this point, bulls and bears are at a 50%. They've come halfway and nobody knows what to do. They're bumping heads. Somebody's going to win the race.
Yeah.
It's either going to be to the downside or upside. So in this case, if we break to the upside, okay, I'm just actually going to use the 76.4 here. And to the downside, I'm going to use right here. All right, very simple targets. Now, as far as the neutral line goes, I'm actually going to use the 50. And just underneath that for the body.
Yeah.
Okay?
Mm-hmm.
This one's actually, I love these. These are super fast, really easy to do.
Easy to comprehend as well.
Yeah, a little bit easier, right?
It confirms the bull if it's above if we get the 50 bounce above the 618.
There you go.
And if we get indecision below the 50, then obviously chop city or sellers in control.
Right, exactly. Okay, so we bring that right there. Okay. And remember, these blueprints that I'm showing you, if you don't trade futures, that's okay. You can trade, gold. You can trade on ZB, which I'll show you in a minute. You could trade TLT. There's different things that you could trade. These things are money. They really are. Like, it's crazy. I always tell Ashley, if I were just to be by myself again, We should just wake up in the morning, trade these blueprints, and be okay with this. And of course, I can't stay away from the PMZ trades or whatever, but this right here is just, I love these. These are beautiful. They work out very well. So here's our targets to the downside. If I were to, find some demand in here, it'd be right around the accelerator right there. And then supply would be up here in these topping wicks. Guys, when you see topping wicks, just think bearish. All right, there's selling pressure up here. So it's very easy that price comes up into the ME and gets resisted because right here, they're just not allowing any kind of price movement above there. Okay, so these are the targets to the upside for gold, and these are the targets to the downside. All right, let's go over here to the bonds. So what is usually the correlation? Anybody know? I mean, sometimes there's not. Pat, are you on here? So I know Pat likes to look at some correlations as well. I mean, sometimes, gold is going in the opposite direction of the market. Sometimes it's not, right? So to me, I try not to read too much into it. Okay. So here, what I'm thinking is this is kind of in the same, it's in the same exact area that we have the ETFs. Either it's going to just barely pop and then right back down and go sideways, or we could break out above the ME. Okay. And then we're sitting on demand and we're right above supply. So basically, it's a sideways filling for me for sentiment. Okay. And again, I'm just kind of talking out loud with you guys, trying to talk out loud what's going through my head as I create these. Let's go to ZB. All right. So here's our chart for last week as well. And you can see here we have Monday, Tuesday, Wednesday, Thursday, Monday, Tuesday, Wednesday, Thursday, Friday. Price pushed up into target one and right back down to neutral. It broke above the neutral. Again, you could be trading TLT with this, all right, instead of the bonds futures. We get it inside and we get an up. Where do we take the trade? If you're brave, right there. As soon as you break this candle right here to the upside, boom, hit target one. We kind of stall out here, okay? Now we're sitting basically at the accelerator. The accelerator, if you look to the bubble to the right, 182.707, amazing. Sorry, accelerator is actually down just a tad. Give me 1 second. Are they the same? No, 182.10, pretty close. All right, and you can see I already have that marked. All right. So this one's going to be pretty nice as well. Let's go to the pivot high up here, to the pivot low. Okay. And you can see last week I was using the 38 and the 50. Okay. Sideways trend. Either we break down and get back into the bearish channel or we start to break out. So today, or sorry, for this week, I'm going to use the 618. Okay. Sorry, right there. I'm trying to find my lines here. All right, so I'm going to go right above the 618 and the body of that candle. It's right there. And then I'm going to use the 50. So another easy one. Sorry, this trying to capture all these. Very hard to click on these. All right, so I'm going to come up right here at the 50. And I'm going to use this guy. And I'm going to use this. I'm going to use the same target because it's right above the body here. And I'm going to use the 76. I'm going to use the 88.7. These are perfect. Underneath the 50, I'm actually going to come down just a tad. And the reason why is I'm going to use the body, the inside body of this structure here. Okay. I did not mean to do that. Let's try Control Z. There it is. It came back. Don't forget about Control Z. It'll save your life. I mean, it just takes forever. Really helps you with your timing. So here, we'll put that right there. And we're going to keep that down there, but we're also going to mark the 38.2. Now remember, as easy, and maybe this doesn't look easy to you guys, I'm not sure, but as easy as it may sound to some of you, it's not that easy. The placement of Fibonacci's took a while because they have to be confluent with supply and demand. That's why they work so well. Okay. So here we have targets to the downside. We have one that's pretty close to the decelerator, and these are a little far extended. I'm actually going to take this one down here and put it at the last WE. It's about right there, and I'm going to keep this one here. You can see it's confluent with the EMA there. Okay, so this is ZB. Then over here on the dollar, I think it's dollar sign. Yep. Look at this one. Oh, guys, I'm telling you, man, every time I come over here and look at these, I just, I think every single time I'm like, John, just trade these, man. It doesn't have to be too complex, right? So here we are, Monday, Tuesday, Wednesday, Thursday, Friday, same thing. It breaks above, it hits target 1, comes down, retest, and right back up pretty close to target 2. Okay. Okay, for these purposes, we're going to use this pivot high. It's pivot low. We notice that we're at the 50. This one's going to be easy again, just like the rest. We're going to use, in this case, I'm not going to just use the 50. I'm going to use the 38.2, and I'm going to use the 618. Okay, so basically we're going to stay pretty calm while we're in here and let it do its thing here. Okay, our target's going to be right here underneath this body and just underneath 76 right there. And then to the downside, I'm going to use right down here on this 23. And then I'm going to use just right here at the YE. Nice. Looks like that. All right. Boom. So that's what we have for the dollar. On the VIX, I'm not going to go over that with you guys because it's not, I'll do that at the end of the day. But you can see here. All right. Are you guys still on? Did you all fall asleep and say, screw this, it's Sunday? Some of you guys
Nope,
still on?
still on. This
Okay,
no,
cool.
this is very enlightening. I
Still
really
here.
appreciate it. Yep.
All right, good deal. So what I really want to be able to express to you guys is like how well this works, and I'm showing you these things before they happen, but I'm also showing you after the fact. And when you come in here to the broad market analysis, I'm telling you, you're gonna be like, why the hell didn't I trade this? I do it every weekend because I get into this mode, right? We're looking for Netflix and we're looking for Nvidia and we're looking for all these cool things, and I come back here and just think like, wow, man, you know, it on Monday it broke down below the neutral on the VIX, and I could have just went short into T1, T2, and look where we're headed. T3, beautiful, right? One eye open, nice, Andrew. All right. So we'll get to this. We'll get to this, the VIX. I'm not too concerned about it. So again, John Carter. So the things I learned from John Carter was about the VIX, about how he talks about debit spreads. And Raul, if you're on here, you know this. Some of you guys have come from John Carter's room. Um, 45 days out, because usually the spreads, the directional of the debit spreads just keep you from paying up too much premium. And I tell you what, if you were following this blueprint at this time, and you were following what it said here, you made a ton of money. All right. Now we're in a little bit different time frame. Again, we're down here at $46. It's pretty high. It looks like it's dropping back down all the way down to the monthly edge, guys. So as long as we keep this trend of lower highs and lower lows, these are my targets again. Okay, all the way down here at 31.77 and 26.55. Pretty simple. All right. Oh, well, actually, let's do this. This is a downtrend. Sorry. We're gonna do this really quick because it's a little bit different. This is the extension to the downside is kind of nice. So I want us to look at this. So this is a little bit opposite. We're going to use the pivot high here, and we're going to come into the current price right there. All right. So how should we be thinking here? The trend is down. So as long as we stay below the 23.6, the extreme bearish, okay? And then what? Where do we want this? I'm going to come down just a tad underneath. All right. And we're going to get this target here in a minute. Oh, thanks, babe. Appreciate it. Daughters made me pancakes. Very sweet. All right, so we have the 23.6. We're just going to use a low. I mean, seriously, I'm just going to use this low right here. Okay, that's going to be my neutral right there. And as long if we pop in here and then we resist and go to the down and we break again, so for the VIX, if it breaks to the upside and then for some reason breaks down towards the end of the day, short, looking for targets, old WE, this wick, and the ME. Okay, so down, WE, wick, boom. That's what we're looking at. To the upside, okay, we're going to change this around. Top to the bottom, it's going to be the 38.2 and the 50. You can see the confluence, guys. All these candles right here having a hard time. Okay, right at that area, so it makes sense. So that's what it looks like, blueprint. Okay, now to finish this up really quick, because I don't want to take up everyone's weekend. We've been in here for what? Ooh, geez, hour and a half, man. Time flies. Now you guys can appreciate how much I put behind these. But I want to show you how I scan sometimes for our swing setups. Okay, so I have a scanner that looks for the edges and so forth. And I'm going to go through one blueprint for the swings. Now, if you're paying attention to this, it's giving you an idea of how I do my setups for swings. Okay, so on my scanner, I got a lot of stuff that actually popped up here, which is kind of nice because it's been a while. We have, let's just see what these look like. So we're going to, first of all, it's a swing. We're going to go to the weekly. And the first thing I have here is called ACAM, K-A-M. This is the first thing that pops up. Okay. I love my scanner. Thanks, Jay, if you're on here. I told him what I wanted to find. He wrote it up. And I mean, I tell you what, when these come out, I look at them and I just immediately, I'm like, ooh, these look good. Right? All right, guys, let's start over here. Do you like this chart when you look at it? What are some things you notice about it? Okay. Yeah, strong uptrend. Looks really nice. Okay. You could throw a channel on here if you want to. If you never mess around with Thinkorswim, you can grab this thing right here. You could do something like this. Okay. And pull this down right here. You can see that. Nice little channel. All right. And it came right down. So the levels that I have, if we go to edit properties, this is what I use, 33% and 66%. Okay. Basically, I break it into thirds. And you can see it came right down to the 66. Okay. And popped right back up. All right. So nice strong uptrend. Let's look at the ATR. These are the processes I take when looking at swings. I think, okay, weekly ATR is $7. I need to know that. This thing likes to move a little bit. I'm really not into swings that are moving $1 a week, okay? So the next thing I'm going to do is look at it and go, hey, it's right at the accelerator. I start getting excited, okay? 96.06 is the accelerator. The ME, 95.65. Because it's already tested the accelerator from underneath its resistance until it's not. What do you think I'm going to do here? Anybody?
Go long.
Yeah, right. So we need to have some sort of blueprint, right? We need to understand like what is our we got to have a plan. To me, like if you don't have a plan, like it's just scary to execute in this market, all right? So I'm going to use the high and I'm going to use the ME, okay? Just like that. And I'm going to place this here, just like that. It doesn't have to be perfect. I'll look at it, and this is my risk, 96.69 by 95.44. Now, that's just the first thing I do. Now, let's apply the Fibonacci's just like I showed you on the rest of the stuff. Pivot high to pivot low. Oh, wow. How did that magically happen? That's just weird. It's right at the 76.4, guys. Weird, right? Pretty cool. All right, so our next target from the top is going to be the 88.7. However, notice that the base over here is just below. I'm always careful, so I'm going to have a target right there. And then I'm going to have a target, once we blow through that 88.7, I want to see the double top. And I'm going to come just a little bit below that. That's your blueprint. 99 and 103 are your targets, guys. Your stop, or just your risk profile, is 96.69 by 95.44. Not bad. Not bad at all. However, we're not finished. We just got the targets to the upside. Now let's take, this is a little bit different. Let's take the trend that it's on. Right? 3 white soldiers, is that what we're looking at pretty much here? Very nice and strong. Came back to the YE, to the tick, moved up. This is amazing. Okay. We're going to measure this trend, folks. We know that it's bullish as long as it stays above the 23.6. What is my setup? I've always talked about this. When the setup's between these accelerators, we're looking for the move up, right? As long as it's going to hold in here. So down here, I'm going to mark just right above the decelerator. I'm going to open this up so I can see it a little bit. It looks like it's 91.56, which is pretty damn close to the 23.6. So I'm just going to mark this. Now, why am I going to mark this? Well, because if Monday gaps down, I'm looking to see if we can get long at 91.63. You see what I mean? If it starts to break down underneath here, sure, we have 3 different setups here. We start to break down. You could look, if you're aggressive, to short down into here, but I treat these with a little bit more respect. It's more like, hey, if we gap down into this level, just like I've shown you on all the ETFs, I'm looking for now on a 30-minute candle, 10-minute candle, go over to the daily, see if we get it inside and up, look to trade off of this. And now instead of, getting long here, I actually got to get long way down here at a bargain price. And then if we break above, we're adding in this trade setup, starts over, and then we get this. Okay? So all I did was measure these candles. I found the bullish trend. It's also confluent with the EMAs. So if these guys start to wrap up, you can see that right here, and they come in and we gap down, probably have a little bit of support there. It's also confluent with my midline here. This is a great opportunity, in my opinion, to start looking at the long. Okay? So this is the setup. I know what my risk is if I take it out of here. Because this risk is so small, you may be thinking, well, I need this thing to go in my direction when we take it. We've seen that. So again, let's go over how we approach a swing position. We start. I don't know what this thing's going to do. In this market, it could do this, or I could start a position and it do this. All right. So in this case, what we're looking for is momentum. As soon as it breaks over here, I'm willing to take it. It's better if it starts to move in my direction here. Okay. And then you can enter and or add above here into targets. Again, trim or close. It's up to the trader. If we continue inside and ups, we're looking for that double top here. Okay. But all I can say is when I look at this, the YE worked very well. We're in an uptrend. And then now we need to look at the actual strikes. Okay, very important.
John, how much do you think, like, how do you think about how much you trim at T1 versus hanging on to T2? I'm sure maybe that's a bigger conversation, but just curious.
Say that one more time. I'm sorry.
Yeah, like if you have a half a position on, how much do you typically trim of your position at the first target, like, and then how much do you hang on to go and try and see for the second target? If that's what
Yeah.
you're
So here's the thing is like I struggle with at times is I feel like everyone's different, right? And I love that because you'll see that sometimes when I lose money, someone actually made money on the same trade because they waited for the pullback or vice versa. So some people might say, well, I want to trim here at 99.31, and whether you have 2 or 4 contracts on, the way that I want in this market, all right, because it's volatile and it's pulling back on us quickly, or we're getting these quick jolts, is I'm thinking like every line is a new trade. All right. So what I mean by that is if for some reason you took 4 contracts and at this point you're up 100% and you don't want to wait, you can exit all 4 contracts and then just sit here and wait and go, okay, my rule is I'm going to wait until we see the setup again. So all you're doing
Hmm.
is you're taking this setup and you're moving it here. You already made
Makes sense.
money, right? Why worry about it? And then we just sit here and wait. We get it inside and we get it up. I'm starting over. My risk is, let's say, $1.20, and I'm trading up to this target. Okay.
Yep.
If you're holding those contracts and hoping for this, I hate when, I don't actually hear this a lot, but it does make me sad if I hear somebody's like, yeah, well, I only have 1 contract, so I didn't sell it. And I'm like, but man, even though it was only like $60, it cost us $3 to put it on, and now you're down 250.
Hmm.
So to me, you guys would be surprised. These small $60, $50, they add up over and over. And we're just talking PMZ trades, these type of trades or whatever. Um, my biggest thing is looking at the option strike and trying to figure out what is going to make more sense for the the trader, the most common trader that I meet. The most common trader that I meet has a couple $1,000s in their account, and they're really wanting to make a lot of money, which is probably not the first, process first for me, but we want to be able to find the best value. So to me, it's getting out at our targets or adding above the target. All right. So always having more than 1 contract if you can afford it. So the first thing I'm going to look at this thing is the ATR. It's $7.20. My target is 99. All right. When I come over here and I look at 17 April, if my target's 99, the spread says 13 cents by 480. That's crazy. I see some open interest on the 100s, which tells me, hey, some people have the same thing in mind, right? We're looking at the same targets here, right, underneath this supply,
Hmm.
which is really nice. What
Would you say this is liquid, John?
this one here?
This the what's it called, the options here.
We can. I mean, it's hard for me to look at since it's right now. I mean, a lot of
Yeah,
these have been skewed on the close,
yeah.
so I'm not sure what's going on.
I
You
just see
know?
the spreads, and it's
Oh
just
yeah, I see it too.
when I see 13 cents and then $5. I mean,
Yeah.
that's
So
immediately like red flag for me.
oh yeah, 100%, man. And I'm not going to take this trade and be like, "Hey guys, it's the bid is 13. I got in at 4." Meaning 13 cents, right? Like that
Exactly.
is
Yeah.
absolutely crazy. But the overall, thought of this is regardless if we're trading AKAM, it's the same process, right? So what I want to look at is the option. I want to look at the price. I want to look at the ATR. I want to make sure this makes sense. I mean, is 100 feasible if I'm right about this trade? Heck yeah. It's trading at 95, man. So that's right around that ATR. A little bit lower, but still, we can get that push up into the back of the candle right there, which pretty much, puts us where we need to be. Now, if they're not liquid, this is the thing that I've been, uh, I'm looking back and I'm like, man, I have a lot of equity trades. We had some new trial people come in. They're like, do you even trade options? I'm like, yeah, but this is the kind of thing that we're seeing across the board and a lot of names. So if I really want my setup, I'm just going to trade the equity. All right. If we have spreads like this, it just doesn't make sense. Nobody wants to pay, if it's saying 30 cents and they want $5 for it, that's crazy. All right. So to answer your question though earlier was at 99, if you're happy with your profits, take most of those off and then just wait for the process to develop again and reattack the trade. Right. Like Andrew said, every line is a new trade. Every line. If you can get into that mind frame, right, then I think that it's really going to help. So I want to open this up to traders and you guys give me feedback. Like, where are you at? Where do you feel like you struggle? What can make things easier for you? Um, yeah.
I think for me, like this is all great, but I'm still not to a spot where I have like good understanding of how much risk I want to put on each
Mm-hmm.
trade and
Mm-hmm.
what position size to take on. So and a solid plan around like how much to trim at each target. So in the situations where I've gotten into trades like this or other ones you trigger from the room,
Mm-hmm.
sometimes I'm a little more strict about taking the exits when I should versus not, and it just makes
Mm-hmm.
a difference in the results at the end.
Mm-hmm. Mm-hmm. I
And
think we're
I'm very, very poor at using TOS like you do. So even like putting together charts like this would be incredibly difficult for me because I feel like I'd have to spend hours getting my TOS
mm-hmm.
up to where I need it to be to kind of build what you're building here.
Yep, well, I'll tell you what is, I had a personal call with Blaze. I don't know if he's on here right now, but he just wanted me to give him, that introduction into Thinkorswim. Sometimes I forget, like, not everybody knows how to navigate this very well. So, I mean, this is, again, I have this open time with you guys. If there's some questions you want to know how to set something up, just ask me. The more we use it, I mean, the more, you're going to get better at it. But it's something, look, I was never this fast and fluid with it. It just took a lot of practice. With trimming, it's funny because I think Jake, I'm not sure if you're still on here, Jake and I talk quite a bit. What I find with most of the members is they're struggling with allocation. And I know I say this over and over, but what is your allocation? What is your number? What are you, what do you, are you actually, put it this way, Jake, are you in here, man? Are you listening? 'Cause I'm about to talk to you. Sean said too much. Nice.
Which
So
is great when it goes in your way, but that's not reaffirming a process. That's just emotional trading. Yeah.
right, exactly. So I talked to one of our members yesterday, I think so, or Friday, and what we found is that he's getting a little frustrated because he felt like he wasn't making enough money. All right, and so meaning like he was making good trades, but when we came down to it, I want to explain something to you guys just really quick. So, and I'm trying to remember our conversation that we had. We were talking about PMZs and we went over every trade he took that day. All right, like 5 or 6 trades, and 4 of them were absolutely profitable. But what I had noticed, and I noticed this with almost everybody I talked to, nobody is using an allocation. It's like, oh, well, this kind of feels like it could be the one, so I'm going to put 800
Yeah.
bucks in.
Yeah.
And then
Yeah.
it's like, oh, but this one, it doesn't feel right, so I'm going to put 200 bucks in. And I'm just
Yeah.
like, what is your allocation? How much are you willing to lose on every trade? You guys need to know that, like, right now. Like, how much money are you okay with losing, right? Per trade. So what does that leave you at? Let's just do something very simple. Let's say that every day you're okay with losing $250 per trade, but you don't want to lose more than 1,000. Okay, that's extreme for some people. They're like, man, that's a lot of money. So that gives you, if you think about it, it's going to give you how many trades? 4, right?
4 full allocation. Yeah.
4 full allocation trades. That
There you
means
go.
that you're not allowed to go, I think this is okay. I think this is the one. That just means when you step up to the plate, you're going to swing and you're either going to lose 250 bucks or you're not.
Yeah.
All right. And so when we went through these trades, it was amazing when he started thinking like, okay, so let's just say you have a margin account, all right, and you can buy 200 shares no matter what we're trading, except for Amazon. All right, not most people in here can buy 200 shares. So everything that he was trading, he could take 200 shares. Now we take the PMZ into consideration. Okay, let's just look at this right here, ACAM. All right, the PMZ 94.56 by 94.35. Let's just say that it's 30 cents. Let me ask you, how many shares can you take off of this?
Wow.
How many shares can you take? If you can spend, let's just say that you have, sorry, let's look at it this way. Say you have a $25,000 account, you have margin, you have $100,000 you can trade with intraday, right? Almost 1,000 shares.
Yeah.
Almost
Considering
1,000
trade,
shares.
or
So
almost
what I was
1,000 shares.
finding is, what is the difference between this trade and Nvidia and Tesla and anything else, guys?
Yeah.
Nothing. The difference is the spread between the PMZ. Okay, and in this thing, let's go over here to something that we typically trade. Right? So we have to base our allocation on the risk that you're willing to take. So if the spread in here is $2 or $2.50, I can only trade 100 shares. Okay? But if you go over to Starbucks and it's only 20 cents wide, then you're talking about 1,000 shares. So when we looked at all his trades, man, they were so good. Like legit. If he would have allocated and he had the account size where he could do this, and he did, it really like starts to open your eyes. It's like the process doesn't change, folks. You're going to lose 250 bucks or you're not. And if you're doing 40 shares here and you're doing 30 over here and you're doing 100 here, it's not going to make sense if you're not using that risk that you're supposed to be using. Does that help?
Yeah, that makes sense.
So, I mean, it's crazy. Believe me, we were talking about. I think this individual was down 100 or up 100 for the day, but allocating what he was expected to lose, which what he was okay with losing, he would have made over $1,000. Nothing changed. The candles did what they were going to do. The PMZ was where it was needed to be. The only thing that changed was him. He was the factor. It does get, yeah, it gets harder for options for sure, Jennifer, right? Because the other thing is theta, right? We can't
Yeah.
like, we've been pretty spot on just by using delta. You guys have seen that. I've shown you examples in the room. I'm like, hey, with this starter right here, I'm expecting to lose 130 bucks, and boom, I lost 130 at my stop. Everything was the same. All right. So, and the reason why it's working out is because the volatility is in our side. Back in months and months ago, what would happen is you take a trade, you do the math, and let's just say that right here in the center of my screen, we buy BA here and we're excited, but when the volatility was nothing, it would do this all day. So as soon as it went up here, we're still down, because of all this time in here. All right. So that happens. But we have shown with the same trades using options, and I showed earlier how to use that bracket order through the week. It's the same thing. Just create those templates to where you're risking X amount of money, 250 bucks, and you have your option selling it at your targets. So yes, the math definitely is different overnight as well. There's a whole different risk with options. But no matter how many times I look at this, if you're trading the process, if you waited for the lower low out of the PMZ, you can't tell me that the option didn't increase here. Okay. Here as well. Inside and up. Okay. 129, and it bursts into 136. Unless you're buying far out of the money, like some ridiculous lotto trades, this is going in the direction using the process. Okay. Now I have spoke to it's amazing, right? And I'm just being very transparent. It's amazing the different results I see in here. You got I'm not making this up, guys. I have traders in here making over $2,000 to $3,000 a day using the system. And then I have other traders who are, barely scraping by. And then you got traders who are pretty consistent. But what I find every time I speak to them is that the ones that are making money on the daily, they're just trading lines. They're not putting too much thought process into it. They're like, hey, inside and down, underneath the PMZ, going short. Like, where'd you get out? Oh, as soon as it broke above the 9. Okay, cool. Right? So when we look at so let me ask the question again. So are you guys allocating correctly? Seriously?
No.
No, right? I mean, let's be honest. Right? Anybody else? Okay. So to me, that's where we're not letting the probabilities play out. I mean, how can you truly say if something's working for you if one trade's $200 allocated, the other one's 1,000, the 1,000 doesn't work, right? That's usually how it goes. It's the biggest variable, I'm telling you. Everyone I speak to, I have a lot of private calls. It's the same thing. They're scared. You take a trade, you lose it, you don't feel confident, and you change your allocation. So it's telling me that you're not truly accepting the trade. Yeah, you could do that too. Great, Pat. So let's just say that your $250 risk, you're only buying an option that's 2.5 as well. But we have to do something that across the board is consistent. Which one's it going to be? If I buy $1,000 worth of options and I have a $250, variable that I can't go past, that means the option position can only drop 25%, guys. I'm not really giving myself any room in this market, right? So maybe, $1,000 is not what I want to use. Maybe it's 500. Then I could take a 50% stop. Okay. Right. So outside of any of that, so again, I think maybe, let's all on Monday, tomorrow morning, whoever's on here with me, let's make it, right? This is teamwork. Everybody, let's make sure that we're allocating the same amount. Not all of us, like you don't have to do the same thing I do. But what I'm saying is have a plan. Just try it out for 1 week. If this week is your week that you want to see if the probabilities can actually work, write down right now how much you're going to allocate per trade that you're okay with losing. I want you to think that you're going to lose every single trade. $250, you're able to lose $500 a day, you're going to lose $2,500. I don't want anybody to lose that. But what I'm saying is, whatever that number is for you, we gotta just keep trading it, trade the process, let the probabilities work. Don't be afraid to execute. Know what your stop is. Your stop is $250, guys. Maybe it's different, but again, I'm just giving you a hypothetical. That's what you're going to do every time you execute a trade. Make sure that when you execute the trade, it's actually based on a process that works. If you get stopped out, move on. Okay. All right, so I'm going to take off. My pancakes have been sitting here. They look like a sponge. I'm pretty sure all the syrup has soaked up into these bad boys, right? So I really appreciate it. Don't feel alone, all right? Like I have bad days too. I think you guys know that, right? I mean, I get worried as well. I have a pretty big position in what's it called? Love, and they dropped like $2 on Friday. I do have myself hedged a little bit in that, but things happen. So um, keep on pressing on. We'll see you tomorrow morning. Tonight, I'm excited to trade some futures as well. So if we get, again, if you guys are interested in futures, please reach out. I can give you a couple. We still trading the same way. I give you the blueprint, the line in the sand. It's the master. If I get it inside and up, I'm long. That's all you need to know. If it's inside and down underneath the list, I'm short. The MES is great for me. I could do 2 or 3 contracts, and it's definitely not like an ES where I'm getting, paranoid and my blood pressure goes up and so forth. So if there's anything you guys want to see, just let me know. And I'm going to continue to work here. I appreciate it, and we'll see you tonight and tomorrow.